All right. At the end of this video, I will show you a chart explaining how we are importing inflation from China of all places. That's right, importing inflation from China. And the response to this points to rising inflation for the United States, no matter what we could possibly do. Now, that's a lot. Gonna get to it soon. But before we begin, welcome to the Black Bullion Show. If you're new, please consider hitting the subscribe button below. Also, please consider hitting the like button. It helps the YouTube algorithm get this video out to the masses to help bring more people into the fold of precious metals. And if you just want to get a quick video synopsis without having to watch the full thing, check it out in the description below. So I was reading this article here about inflation happening in the crisis aftermath. The authors to the right here, you have Charles Goodard and you also have Manoj Pradhan. The authors here came up with 3 potential reasons for inflation after this issue ends. The first one is injecting cash directly into broader measures of money, as opposed to what happened in the recession where QE printed it into banks and they kept that on excess reserves and they were actually earning interest by keeping those excess reserves at the Federal Reserve. That's the first one. So we're giving more people money directly to them. The second one, the speed of recovery will cause inflation. Now, this is something that I don't necessarily see happening. I don't necessarily see us recovering quickly, but these guys think that this could be a possibility. And if it does happen, we might see inflation from that. Now, the third reason caused me to raise an eyebrow. The third reason is that China used to be an exporter of deflation, became a more neutral exporter, and now they are the exporter of inflation. So that last one caught my eye. And you might be wondering, well, how exactly could China be exporting inflation when we are exporting inflation to China and we are importing deflation from China? How is that happening? So here's more info on that, actually. And this comes from an economist named Paul Salman. And he says the following: what people usually mean when they say U.S. exports its inflation is that we are flooding the world with dollars. To the extent the dollars are held as reserves by other currencies, ergo China, Japan, those countries are holding assets that are worth less as the dollar drops in value. Thus, their monetary wealth is diminishing with ours, i.e., inflation. It seems to me an iffy argument, however, because as the dollar drops, U.S. exports become cheaper and foreign currencies become stronger. That's the opposite of inflation. And here, another analyst wrote the following: China's official GDP deflator shows inflation is quickening, but the CPI, the gauge most investors follow, points to subdued price pressures. Something does not add up. Inflation measured by the CPI has long diverged markedly from inflation measured by the GDP deflator. There should be a divergence because they measure different things. Because the CPI fixes the weights of different goods and services based on their share in overall consumption, usually over the course of a year, it fails to capture any switches to alternative goods or services during that year. But the difference now is too large to be explained purely by the deflator capturing the substitution of items whose price is rising fast with items whose price is rising slowly or vice versa. Check this out. There's just a huge difference between the two now, as you can see right here. So now you may be asking yourself, okay, I've heard of the CPI, or as some of us like to call it, the CPI, but what exactly is the GDP deflator and how does it show us inflation? I thought just the CPI showed us inflation. Well, here is a quick difference between the two. Although at first glance, it may seem that CPI and GDP deflator measure the same thing, there are a few key differences. The first is that GDP deflator includes only domestic goods and not anything that is imported. This is different because the CPI includes anything bought by consumers, including foreign goods. The second difference is that the GDP deflator is a measure of the prices of all goods and services, while the CPI is a measure of goods bought by consumers. Okay, so finally, you may be asking yourself, or you may be wondering, well, so what is this chart that Black Bullion told me about in the beginning of this video that will show that we in the US are importing inflation from China? Well, drum roll please. Here is a chart from the World Bank. This shows the GDP deflator for both China and the United States. As you can see, the inflation for both have been rising. China's is in blue, the United States is in green. Now, for a period of time, they were somewhat in lockstep with each other in the 60s, and they started to diverge. Now, take a look at where they start to diverge and where they start to diverge heavily. This is right around the time when we start to see gold, even before 1971, we start to see gold go up a little bit in price. But obviously, we start to take gold off of the gold, or the dollar off of the gold standard. And we start to get attached to fiat currency. We start to do fiat currency. In 1979, some of you might have, been born around this time. I wasn't, or have been around during that time. But that is when we actually started to do trade with China. Now, why is that important? Well, take a look at what happens with China right around this time. We're starting to see some slow, very, very slow growth in their GDP deflator. And then it just slowly and then rapidly starts to goes up. But take note that our inflation, our GDP deflator, is always above that of China, which means that China will, once they give us goods, export deflation back to the United States, as long as this line is below ours. Now take a look at what happens over time. That gap is beginning to close. Now take a look at where it stops, or where we meet. We meet right here in 2011. Remember, 2011 is when gold started spiking up a lot. Now, take a look what happened thereafter. China begins to increase over the United States. Then they came back down in 2015, 2016. Okay. Now take a look at what's been happening recently. After 2017, 2018, we're starting to see China peak up above the United States. We are starting to see China display inflationary behavior, whereas it's much greater than our inflationary behavior. So if China continues this trend, we get rising prices. Now, if we start to cut China off and bring jobs home back to the United States, we still will raise prices. Why? Because then we will have to begin raising wages. one of the for companies, specifically for companies, one of the benefits of globalization was for them to get cheap labor. They can export jobs outside of the United States, hire people at a cheaper rate, and by doing so, they lower the cost of their goods that they sell back to citizens in the United States. Now, if these jobs come back, we will have to raise wages. Now, this will prompt cost push inflation, which would mean that the rising of wages will then help or will then push the rising of prices. So this blew my mind here, not only because I learned about a new way of measuring inflation using the GDP deflator, but also because China, their GDP deflator is rising above the United States. This is insane, and we are still importing goods from them. So what do you guys think about all this? We could either have a situation where we continue more of the same, importing goods from them, or importing inflation, I should say, or we do another situation where we bring jobs back home, but still we make inflation rise because we are pricing in higher wages. Now, the higher wages will be good for the American worker, but again, prices will rise. Now, we know what the I word means for gold. Obviously, this is bullish. But let me know what you guys think in the comment section below. If you learned anything new, please consider giving me a subscribe if you are new to the channel. Also, please consider giving me a like to help get this economic evangelism out there to the masses. And thanks again for watching. Really appreciate your views, and have a good day.